Good evening, everyone. Welcome to IQI Canada Evening Talk. My name is Yousaf Iqbal, country head of Juwai IQI Canada, and also none other than this is that time of the month where we do an economic update with none other than Shan Saeed. Good morning to you, Shan. How are you doing? Welcome to the show.
Thank you, Yusuf. Good morning from Kuala Lumpur. It's always a pleasure to be with you.
So how was you doing, Sean? I know you were on your vacation, but although you were on your vacation, but I see you were still working because a lot of things were happening, and I could still see Sean, going on your action. So first of all, how was your vacation? Looks like you were having a good time. You had a good time.
Yes, Yusuf, vacations were pretty good. Even I was on vacation, but as you know, the press and media in Pakistan, they know me since 2001.
Yeah.
And I have been in this media and press business for the last 21 years now. And most of the press and media in Pakistan, the moment they see my updates on Facebook, everybody calls me, Shan, can you come to my show? Can you come to my show? But I go back to spend time with my son
Nice.
and with my family in Karachi. So, yes, press and media, I always say press and media, they make you larger than life.
That's
And
true.
I'm
That's true.
grateful to press and media, not only in Malaysia, but also in Pakistan, in Dubai, in China. I'm very active in Indonesia, especially CNBC Indonesia. They have given me a lot of limelight, so I'm grateful to all my press and media friends. I am back in KL, and my press and media friends in Malaysia, they always say, Shan, you are back, so you have to take our interview. So, I have to say yes, I cannot say no to them.
Awesome, awesome. So everybody, we are live on our show. If you have any questions, please do ask us. And I can tell you one thing that at IQI with Shan Saeed, we make very sophisticated and our smart investors. We cater to them because of the market insights and the economic outlook, which we look as a company. We get the insights on it, and based on that, we make sure that our investors are investing in the right place at the right time in the right property. Having said that, Sean, let's go to the questions because I've got a few questions lined up for you. And of course, one of them, the first one is what is going on with oil? Oil is trading at $110. Gold is at 1943 per ounce. As we are heading, are we heading back to a 1970 era? I mean, is it oil shock and stagflation? What does history tell us about that era? How serious uh, or bad it looks like? Where are the opportunities? I know you've been talking about stagflation. So your views on what's going on with the oil? Where are we heading with oil?
Yes, Yusuf, the markets are very, very bad. The markets are whistling past the graveyard, and investors are making wrong calls, especially in equity and bond markets. And the benefit of reading history and economics is that you learn a lot of things from history. And I still remember one of my Nobel laureate professors, late Gary Becker. He said, if you want to make smart decisions in financial markets, you have to understand history. And I was talking about Chinese yuan on 7th January 2011, Lower Manhattan Intercontinental Hotel. And the topic of my presentation was Chinese yuan, currency for the emerging markets. And the audience were, they were laughing at me. And the only person who believed me in my insight was my Nobel laureate professor who flew down from Chicago to New York just to listen to me. So, as you rightly said, 1970 era is back. I was born in 1973 during the year of oil shock. Oil shock is back. Stagflation is back. At IQI, we are perhaps the first brokerage house where we said in a newsletter, which is all published, which is all documented, press and media, they know about it, in November 2020, that the global economy, especially the advanced economies, are heading for stagflation. And what is stagflation? When you have high inflation and you have lower growth, you have lower income. So history is repeating after 52 years. Since December, we have been saying that oil prices will meander around 77 to $107 per barrel. As of now, when I speak, oil has already crossed $110 per barrel. So we have been spot on in our forecast, and I wait for March to end, and after Q1, I think I have to revise my forecast. Some of the forecasts that I wanted to share with you and your listeners, JP Morgan is saying that average oil prices would be around $110 per barrel by summers of 2022. Goldman Sachs is saying that oil prices will be touching $125 per barrel by summers of 2022. So you just imagine oil prices are heading north. 2 years back, everybody was saying that oil will become irrelevant, oil prices will be heading south, we will have 10 to $20 per barrel. But all these gurus and pundits, they have been proven wrong, and we have taken a contrarian view based on facts and figures, based on critical reasoning. And at IQI, we are quite obsessed with facts and figures. And most importantly, it's all about substance, because investors are not interested in Cinderella stories or James Bond stories or tabloid stories. They want hard facts.
Yeah.
And hard facts is, that again in the last 5 to 6 years, we have been ahead of the market by at least 2 to 3 quarters. And about stagflation, we are ahead by almost 17 months. Almost 17 months we are ahead of the mainstream media. Now everybody is talking about stagflation,
Yeah.
and we were talking about stagflation almost in November 2022. So people who want to have strategic insight from Juwai IQI, they should follow our newsletter, and they will always remain ahead of the market. So markets are very bad, and I am giving a forecast for oil for the next remaining 3 quarters. Oil prices will be between 125 to and between 125 to $200 per barrel for
Wow.
the remaining 3 quarters. It is
Wow.
based on the premise that geopolitical risk that we have been sharing with the market will remain intact. US dollar is going to depreciate because Russian banks are moving away from SWIFT, and they're going into CIPS, that is China Border Interbank Payment System. And most of the currencies, they are looking at CIPS to follow that. Russia has asked all her clients to move into CIPS away from SWIFT. This is a huge development taking into the market. And once countries they move away from SWIFT to SIPS, so obviously that will give a huge dent to US dollar, because petrodollar will have a major decline in the market share, and you have petro yuan or petro ruble or petro gold,
Yeah.
because Russia has said that they want to trade in ruble, in Chinese yuan, and in gold. So I think that's a major development taking place. The mainstream media is not talking about it, but IQI, as always, we are sharing market insight that are based on facts and figures. So markets are very bad. Oil prices are heading north. Tighten your seat belts, because stagflation is here to stay for the next 12 to 18 months.
Wow. $110 to $125, and the prediction from 125 to $200. I mean, that's going to be like a like a big jump. But as you rightly said, so in this kind of situation, another question comes. Before I go there, I would like to say hi to Rahami all the way from Malaysia. Hey Rahami, how are you doing? Good question. Thank you so much, Rahami. If you have any questions, we are live right now. Please type in your question, and we would love to answer those questions for you. So that brings me back to my second question. Oil is going up, but which asset class takes a hit in this current scenario? Now, I want my listeners to leverage your global expertise and your insight on global macroeconomic landscape.
Yes, thank you, Yusuf. This is a very important question. Everybody is talking about it. So, if you understand economic history, what people have done, what investors did in 1970, they took position in two asset classes. One is real estate, and the other is gold and silver. So, it boils down to one thing: tangible assets. So if you talk to me about equities and bonds, bond is the worst asset class to be in right now, because the yields are trading at 180. inflation is almost 7.5. It doesn't make sense to keep your money in the bond market. And I'm quite obsessed with fixed income debt market because it gives you a lot of insights about the future. It gives you forward guidance about various asset classes, and it gives you guidance what is happening in the market or what is coming into the market in the near future. So I think equity and bond markets, tough call. I would not park my funds, but I would park my funds in real estate, gold, silver, oil and gas, arts, luxury watches, luxury cars, and I will stay long on cash because cash has become a very important class. People may differ with me. They said, you have to burn your cash. You don't keep anything when you have stagflation. But my opinion is very different because it is based on global macro and I understand economic history better than many people, that in a stagflationary environment you have to look at those asset classes that are out for sale, because there are a lot of asset classes that are up for fire sale. So when you have fire sale, when assets are going down by 50%, you have a unique opportunity if you have cash that gives you economic and financial empowerment to go and take position in that asset class. So I think real estate, gold and silver, these will remain very, very into the global investors' radar. And the third asset class, that is coming up is, oil and gas. Oil and gas will remain strong this year. And arts has always been very much secure in times of uncertainty. But the major thing that I want to share with you, people have often asked, Shan, why you talk about real estate all the time? The only fixed asset that goes up during tough times, during war, during geopolitical risk is land.
Yep.
And
Yes.
we at Juwai IQI, we are dealing in land. How can you go wrong? When things are bad, the first thing that comes to any sophisticated and smart investor, they say, I want to buy real estate. I want to buy land because that is tangible. You can go and you can touch the walls of your house. That is yours.
True.
So
True.
we are in for tough times. Geopolitical risk is going out of the roof, and people who have secured themselves, people who have done insurance of their wealth, I would put it that way. Investors who have done insurance of their wealth, they have taken position in tangible assets. So I think what history teaches us, it teaches us, that you have to be very savvy, you have to be smart, and you don't take position, in fancy asset classes. You go where you can touch, where you can feel your asset, and you can, take position in that asset class in the long run.
Great. Thank you so much for that answer. I'm going to say hi to Ardavan, who's joined us from Canada. Hey, Ardavan. Good evening. Good morning. Thank you so much for
Good morning.
joining us. So that brings me to my next question. But first of all, before I go there, what you just now talked about real estate and land, uh, as you rightly said, something which you can put your hands on, something you can always, feel it. In very very tough times, whether the market has been good or bad, real estate from a real estate perspective, they say there are cycles which comes in real estate. It will go up and go down, but eventually, if you look at historically the cycle of a land or the properties, you've always seen them that they've appreciated over a period of time. I remember that during the time my dad started buying real estate, he always used to think like, oh, the properties. You know what? He always used to tell me that don't look at the price because this is going to appreciate. If you're going to start thinking about it, what's going to happen tomorrow? You say, okay, what happens if it does depreciate? If it goes down, even if it goes down, you will still be able to see it go up on that. So
Yes,
I thank
Yusuf, I
you so
totally
much.
agree with you. My late father would say the same, that property will always rise. It
Yeah,
will give you the money. It will appreciate no matter what, whether times are good or bad. And yes, every asset class is a cycle. People worried about, oh, property is going up, every asset class has got a cycle. 5 years back, gold was down. 16 December 2015, gold was trading at 1050, and
Yeah.
today gold is trading at 1943. So
Wow. Yep.
every asset class has got a cycle. So you have to live by it, and you have to be smart. You have to read history. People who
Yeah.
understand history and economics, they have always taken position in real estate, gold, and silver.
That's true. So we got joined by Marsa Umar as well. Thank you so much for joining. So that brings me to my other question. You've been talking about geopolitical, risk, political policy error, friction in the market. Investors are nervous, right? I want you to guide us why these variables are so significant and why investors should pay heed to these kind of risk variables.
Yes, Yusuf, very important question. When we started talking about geopolitical risk since 2016, we knew what was coming into the market. And for any sophisticated and smart investors, they need to understand what is geopolitical risk. What is a geopolitical risk? When you have tensions among countries, when you have skirmishes going at the border, when you have fights going on in various countries, you have civil war
Yeah,
happening in various countries because of economic repression. So geopolitical risk, it makes a huge impact across all asset classes. It is not just gold or silver or equity and bond markets.
yeah,
When you have geopolitical risk, it creates a huge impact on all asset classes, on markets, on countries, on global macro. It has got a huge drive. Second thing is policy error.
yeah,
Central bank policy error, government's policy error, companies' policy error. They made a wrong call about markets. Central bank making wrong calls about the inflation outlook. We have seen it is live in front of us. Last year, Fed said that inflation is temporary. Inflation is transitory. And we at IQI, we have been saying that this inflation in US, UK, Europe, it's serious.
yeah,
And time has proven who is right and who is wrong. So, when central banker, a governor of a central bank, especially Fed, he is making a policy error, obviously the markets are going to suffer. And what is happening right now, everybody is talking when the Fed is going to raise interest rates, because
yeah,
inflation is getting out of hand. It's a runaway inflation. So how are
yeah,
you going to control inflation? The third thing that you talk about, friction in the market, when the markets are not based on reality. Look at valuations. Valuations are all time high. A company with zero income, zero cash flow, the valuation goes to 97 billion. How
yeah,
can you have valuation of 95 to 100 billion dollars when your cash flows are questionable, when your incomes, when your revenues are questionable? How can you attain 100 billion dollars of valuation? So when you have friction in the markets are not based on reality. When you have QE in the market, because the free money that comes into equity and bond market, it creates abnormal valuations. When you have abnormal valuations, obviously the market is going to take the hit. And who is going to take the hit in the market? The investors. So
yeah,
sometimes the investors, they misread the market, especially the bond and the equity market, and they don't know how to cover themselves. And they throw the blame on the policy makers. That is not the, you can't blame the policy makers. You have not done your due diligence. You have not read the market properly, and you throw blame on the policymakers. So at times I feel the investors are not savvy enough, they're not smart enough to make the right calls. And look at equity and bond market and the currency risk. Sometimes the currency US dollar, because most of your investment portfolio, asset portfolios are in US dollar, and if US dollar depreciates, it makes an impact on two asset classes. One is equity, and the second is the bond market. And most investors, they don't really hedge themselves against the bond market and the equity market, and they suffer most because of the currency depreciation. So I think at times I feel that investors, they need to understand the global macro. So, one of our strategies at IQI is, when we share what we share in a newsletter, that we try to inculcate to our valued investors that you have to understand the global macro, what is coming into the market, what Russia and Ukraine war is going to make an impact on various asset classes, why higher oil prices will bring inflation, why manufacturing cost is going down, why freight charges are going up, so you have to understand the global macro, you have to understand various movement, the policy statement, the friction in the market, what QE is going to do in the market, how you're going to analyze what asset class you have to be in tough times. So there's so many variables that the investors, they need to understand before they take position in any asset class. So our job at IQI is that we want investors who are following us, they understand the global macro. They understand the commodities market, the bond market, the equity market, the real estate, the policy statement, the geopolitical risk. So once they are taking position in any asset class, it's not just real estate, any asset class,
Yeah.
they know that we have got this solid market intelligence report from IQI, so that they don't hesitate and they feel confident in taking position in that asset class.
Very, very, very well said. All these things does make a difference, and that's where, from IQR perspective, we come in. And just want, I probably might be repeating myself, but as what I said in the beginning, is that that's where we make our investors we help our investors in making those investments at the right time, at the right place, and giving them a very inside market insights on that. So we also been joined by Madhukar. Good morning, Madhukar, all the way from India. Thank you so
Good
much for
morning.
joining. Really pleasure seeing you here. If you have any questions, by the way, we're live with Shan Saeed. Please feel free to type in your questions in the comment box, and we'll try to answer those. Shan, IQI Canada. Of course, I'm going to ask you about the Canadian market outlook. What's your view on the macroeconomic structure? How higher oil prices will benefit the government, and what other variables should we be looking at?
Good news for Canada, higher oil prices. All those countries that are exporting oil will benefit because of higher oil prices. The benefit for the government, the fiscal side of the balance sheet will remain stronger. But the bad news for those countries who are importing oil, yes, the bills will go higher. For a country like, let's say, Pakistan, the bill is $10 billion annually. It will
Yeah,
go higher because Pakistan is an importing country. So, but those who are exporting, like Canada, Malaysia, uh, Qatar, UAE, all these countries, they will benefit because of higher oil prices. And if you see, if you recall 2008, when oil prices were trading at $147 on 11 July 2008, can you recall?
yeah,
So at that time, many countries that were exporting oil, especially GCC, Canada, Malaysia, they benefited from higher oil prices. So I think this year again, for the next year as well, all those countries that are exporting oil, uh, they will tend to benefit. And another good news is in the last 10 days, Yusuf, I have spoken to 10 people. I have spoken to
okay,
10 people from various industries, and out of 10, 6 they want to move to Canada, 3 to Australia, and 1 to New Zealand. So that clearly, it clearly reflects from the market sentiment that Canada has done a smart positioning, brand positioning strategy among those investors who are looking at relocating, at some of those countries, getting immigrated. So Canada is taking the market share right now because of macroeconomic stability. The very first variable that investors are looking at is macroeconomic stability, political stability, financial stability, housing, education, healthcare, because healthcare has become the number one priority for many investors. And people like you and many others who have got Canadian passport, your healthcare facilities are free because the government is providing it. And the
yeah,
healthcare facility is Canada, it's like world class. It's just like Singapore, US, UK. So everybody, they want to leverage from those, facilities that the country is providing. So I think higher oil prices will tell to benefit Canada, its market, And I've already shared with you, people are coming to Canada. So, Yusuf, you will get very busy, and you should be going to, there's a very important area in Canada, Alberta, Calgary, where you have all the oil basins in Canada. And I think most of the people will be looking at Calgary very, very closely. I want you to share what insights you have about Alberta and Calgary.
Absolutely. So, Sean, talking about the real estate, right? So, in Ontario, the real estate has been very hot. We've been talking about the market, and in 2000 and in 2020 September, I visited Calgary. We started working on a project called Solar Calgary. We've been helping with the developer on that. At that point in time, when I was there, we looked at the Calgary market. One thing I always said was that we will see that Calgary market is going to go up because the prices were rock bottom. And believe it or not, all of a sudden we've been seeing, and right now also we're working with a lot of developers. We're looking at properties starting from $200,000 going to $400,000 in in Edmonton and Calgary. And right now, the Calgary market is also getting hot. Now, number one reason is that a lot of investors who have been investing here in Ontario are able to go would like to secure some units in Calgary. The rental rates in Calgary is really good. There is not much of a there's not much of a rental issues there on that. And plus, as you rightly said, the oil is making a big, huge difference as well, making a big, huge impact. And we have seen that in Calgary before as well. When the oil prices were up, we could see the real estate market was booming. And I can tell you what, not only real estate, now this is going to be like a double effect. A is going to be oil effect. Second is then the economically in terms of the affordability for the people, for the investor, for people to move in, we'll see it. So anybody who's looking to invest in real estate in Canada, yes, Ontario is there. We've seen the appreciation. I think Calgary is going to be something very, very hot. And very soon with this effect, we will be able to see that the Calgary market will be going really up. And by the way, Shan, there was a time talking about like 10 again, 2007, 2008, 10, 12 years ago, that Calgary prices of the houses were more expensive than Ontario. And that's what we are seeing in Calgary. So I think, you rightly mentioned of the 10 people you spoke to, 6 people who want to come to Canada is that I always say that, Canada has marketed itself, knowingly, unknowingly very well in terms of the pandemic, the schooling system, the education, the healthcare, so many other things to look at it, the kind of support which is being given to the families, to the businesses. So that's been really, really good. So anybody, again, Canada, in terms of its investments, whether it's Ontario, Vancouver, Calgary, you will see the appreciation. And I think Calgary is the next market where the appreciation will come.
Yes, I totally agree with you, Yusuf. Canada has really marketed herself. It's all about brand positioning. I'm a very brand conscious person. It's all about brand positioning, how you position your brand into the minds of the clients. Once you position your brand in such a way, you capture the mind share. Once you capture the mind share, the market share automatically comes along. So it's very important how fast, how effective, how smart you are in capturing the mind share. Once you capture the mind share of the clients, the market share comes along. So good luck to you, Yusuf. I'm very happy that you are busy. And again, it would be a bumper year for you, and you are touching $500 million, inshallah.
I'm keeping your fingers crossed, inshallah, inshallah. Lastly, uh, the Fed meeting is coming up. We've been talking about the interest rate hikes, 25 to 50 basis point hiking expectation. Your view, please. What's going to happen? Are we going to be seeing increase, and what kind of increase are we looking at?
Yes, Yusuf, everybody is talking about it, and we have been talking about it since November, December, that hike is coming, hike is coming. I think 50 basis point, 25 to 50 basis points are expected. The way things are shaping up, I think Fed is in a totally confused situation because of this war with happening in Ukraine and Russia. This has put a real drag down on markets, and but I still feel that because of runaway inflation, Fed is going to increase interest rate. But again, it will be a double-edged sword. Many investors will suffer, especially in the equity and bond market, because the borrowing cost will go up. Borrowing cost goes up, it creates squeeze on your earning, your cash flows. The share market will have some tough times going ahead, but eventually the central bank will raise interest rate 25 to 50 basis point, very much on the cards. And get ready, the market will have some tough time, and it will make investors nervous.
Thank you very much, Sean. Always a pleasure having you on the IQ Canada Evening Talks, getting the market insights. And by the way, people who are not following Sean, please follow him on LinkedIn. Please look at his Facebook. I follow Sean every second day, every other day. He is on the media giving his insights, which, in terms of the investors who are looking to invest, or generally as well for the information of where the market is heading to, where oil is heading to, where the commodities are going on, follow Shan Saeed, because I've been following him since 2014, Shan, since the first time we met.
2016, 2015, 2016 onwards,
In
yes.
2015, 2015 on that. Anything else you want to add, Shan, before we say bye to our audience?
Thank you, Yusuf. You have always been very kind, and you have been giving me a lot of limelight in Canadian market through this live talk. I am grateful to you. I am grateful to your team for giving me this privilege. And it's a matter of prestige that the press and media, they always take my views. They always call me whenever they want to understand what's happening in the global macro. They call me first. So I consider myself, I'm very lucky. I'm very fortunate because I believe in one thing, that substance is very important. The markets only follow you if you have substance. I want to tell you something. There are 30,000 people who are following me on LinkedIn, and I cannot add people further, because on LinkedIn there is a
Limit.
benchmark, there is a threshold that you cannot add anyone beyond 30,000 people. So I have to request many people that they can follow me on LinkedIn, because I cannot add people just like that. So I look up in the sky and say, God is too kind. I'm grateful to my Nobel laureate professors at University of Chicago, who have taught me some great insights about economics, about finance, about investments. And I think Juwai IQI is a great platform which has given me an opportunity that I can go and speak in public, in press and media. And press and media always, they value me. Whenever I meet press and media friends, they say Shan Saeed from IQI. When I was working at Standard Chartered Bank in Pakistan, they would say Shan Saeed from Standard Chartered Bank. But now I'm working for IQI, they say Shan Saeed from IQI. So I think it's a great honor. It's a matter of prestige that this company has given me great platform, and I have got a lot of respect and recognition in Malaysian market because of press and media, because of Malaysian audience. Same goes for Pakistan, Dubai, Indonesia, China, and there's so many other markets. So thank you again, Yusuf, for having me in your show.
So thank you so much, Sean. Everybody else, thank you so much. It's been a great show. If you guys have any questions, any comments, any questions you want us to address, please feel free to leave your comments on the chat box. You can put your comments even after the show as well. And I can tell you in our next economic update, Sean, and I will try to address this question, and I will make sure that those questions are being given to Sean. Thank you so much, everybody. Have a good night. Have a wonderful day, Sean. Take care of yourself. Bye bye.
Thank you.